Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with the euro-dollar pair with Paulo Greco. The average volatility of the EURUSD currency pair of the last 5 trading days is 53 pips and is characterized as average. Today, on May 18, we expect the pair to trade between the 1.1572 1678 levels. The upper linear regression channel has turned upward, indicating a trend change to bullish. In fact, the upward trend of 2025 could have resumed a month ago. The CCI technical indicator has entered the overbought territory and formed two bearish divergences, signaling the start of a downward correction that is still ongoing. The EURUSD pair continues its downward movement, which is presumably a correction within the broader upward trend. The overarching fundamental backdrop for the dollar remains extremely negative, and only the factor of geopolitics regularly supports it. If the price is below the moving average line, it's a sign line on a graphic. Shorts can be considered with targets at 1.1597, 1.1572. Long positions are relevant when the price is above the moving average line, with targets at 1.1780 and 1841. The market continues to move away from geopolitical factors, but last week was disappointing for the euro. A more significant decline is not expected yet, but no one knows how relations between Iran and the United States will develop. And now it's time for GBPUSD. Let's discuss it with Paulo Greco. The average volatility of the GBPUSD pair of the last 5 trading days is 101 pips. For the pound-dollar pair, this value is considered as moderate. On Monday, May 18, we expect the pair to trade between the range 1.3223, 34.25. The upper linear regression channel has turned upward, indicating a potential recovery in the upward trend. The CCI technical indicator has not generated signals recently, but situated in the oversold zone. The GBPUSD pair has sharply declined, so the upward trend is currently not relevant. Donald Trump's policies will continue to exert pressure on the US economy, and we do not expect long-term growth from the US dollar. However, 2026 seems posed to be a very positive year for the dollar. Thus, long positions with targets of 1.3550 and 36.11 can be considered if the price is above the moving average line. It's a sign line on a graphic. If the price is below the moving average line, short positions can be traded with targets of 1.3245 and 32.23 based on purely technical grounds. The market situation has flipped upside down in just 1 week. That's all for today. See you online soon.